In today's episode of the Brisbane Property Podcast, we're going to be unpacking the survey results from this year's Property Investment Professionals of Australia Annual Investor Sentiment Survey. And we are joined by the PIPA Chair, Nicola McDougall. We hope you enjoy this episode.
Welcome to the Brisbane Property Podcast with your hosts, Melinda and Scott Jennison.
Hi, everyone, and welcome back to another episode of the Brisbane Property Podcast with Scott and Melinda Jennison. And we've got a guest with us who we've had on previously. We've got Nicola McDougall, the chair of PIPA. Welcome.
Thank you. It's lovely to be here again, guys.
Welcome back, Nicola. I'm super excited to be inviting you back onto the podcast. For those that don't yet know the acronym, PIPA stands for the Property Investment Professionals of Australia. And just recently, PIPA have released their results for the Annual Investor Sentiment Survey for 2024. And this is what we are going to unpack today. And not only are we going to sort of look at some trends that might have occurred at a national level, but we're really going to dig down deep to understand what has been happening here in Brisbane and also across Queensland, and what are some of the trends that have been unfolding over the past couple of years, because this has been a survey, correct me if I'm wrong, Nicola, that has now been running for 10 consecutive years.
Jazz hands, 10 years. That's right. It was our 10th anniversary. I've actually been on the board for 10 years in December.
Wow.
So you start looking, the survey has evolved like all of us have over the last decade, and has, become much more robust, I suppose you could call it. And this year, reasonably at the last minute, which, put a little bit of undue pressure on us, but we decided to rebuild the survey from the ground up. So we just completely started from scratch. And as you probably would have been aware, since all the great sort of insights you've got from that for the questions today, we were able to ask a variety of new questions that, it's not just important for us from a representation point of view. It just gets us much richer data to understand what investors are thinking, feeling, and doing, I suppose. And also we have the ability soon to be able to segment that data in new, interesting ways. So we have much more micro level understanding. We will be able to, instead of at the moment, it's been quite macro. So I've been very proud to be involved. Certainly in the beginning, not in a huge way when I was new on the board, but over the last number of years, I've been heavily involved in the survey and been very proud to be involved with the project, which I think is, really, certainly from a couple of years ago, has created a lot more focus on investors, a lot more focus on investor buying activity, but also selling activity, because until a couple of years ago, until the rental crisis came along, no one really cared what investors were doing.
And
True.
it's a fantastic survey. People that listen to this podcast on a regular basis know Scott calls me a data nerd all of the time. So obviously, coming from a background in research, I get very excited when I see research that's being conducted that is specific to our industry. And as I understand, it's the only survey of its kind that's been running over the last 10 years to really extract thoughts, opinions, and what's actually happening out there in terms of investors. How many participants have you had in the survey?
This year we were really happy, just under 1,300, so 1,288 off the top of my head, which, as we know, and you would know, Melinda, is statistically reliable and robust. We were particularly excited once we got over the 1,000 number mark, because this year, as I say, we did rebuild it, and by rebuilding it, we kind of doubled it in size. And by doubling it in size, we doubled it in the length of time that it took people to complete it. And it was anywhere, depending on your investment journey, anywhere from 20 to 30 plus minutes to complete it. And so to be able to secure nearly 1,300 respondents when there was nothing on offer, we weren't giving away prizes or, gift cards, if you completed because we can't afford to do that. So to actually have that level of engagement, it was just extraordinary, and it speaks volumes for how active our members are with their client databases, because the people that fill out the survey are real investors, they're sourced via our clients' databases. So it's really, on the sort of blood, sweat and tears of our members as well, that these investors are taking the time to fill out these surveys. So, we were a bit nervous given that it was twice as long as it previously had been. But when we got over that 1,000 mark and it continued to go north of that, we were really happy and just so grateful to everyone who took the time to complete it.
Nicola, just before we jump into the data, which I'm all over, by the way, not just Melinda, over the 10 years, the changes you've made, you've extended the survey. Is there anything, and we will jump into activity for Brisbane and go through, obviously, Brisbane and Queensland in a bit more detail. Is there anything that's probably stuck out, surprised you or shocked you from the survey that you've seen? Is there anything that sort of really stood out in any way?
I mean, it's a difficult question to answer, Scott, because the survey up until a couple of years ago was actually a lot smaller, probably relatively, I wouldn't say simple, meaning in a bad way, but, we were generally looking into buying sentiment a lot. For locations, we were asking a lot of industry-specific questions to allow the association to grow and adapt and to create services that our members were looking for, if that makes sense.
Yep.
And then probably, from about 2021 onwards, that was when we really, I guess, pushed it to the next level and were able to ask a variety of questions, which created data sets. I guess, in answer to your question in a long-winded way, we actually created a data set that never existed before, I believe, which was as I mentioned at the outset, no one really was tracking investor sentiment across the board, because we did have a stable rental market, and whilst clearly lending indicators show what investors are doing and things like that, but no one was really sort of saying to investors, have you been asking investors if they'd been selling and why they'd been selling and where they'd been selling. That data just didn't exist before. So if I'm honest about what I'm most excited, or what the biggest thing from those 10 years is, that from starting off from a very small bespoke survey to now being one of a kind, and also so widely regarded across, whether it's from our members, from members of the public, certainly from policymakers, that has been a huge change, not only for the survey, but for the influence of the association as well.
Yeah, I think that the data that comes out of this research is really powerful in being the voice for property investors. And I think that's what you're suggesting there, being able to advocate for those that are in the industry as landlords is a very important thing, especially in the current environment where we do have this rental crisis that exists across many locations throughout the nation. Let's get into some of the data, because this is the exciting part. Now, obviously, we've been talking a lot in recent years about the volume of investors that have been selling out of certain markets. Now, when I look at the survey result, last year, the survey showed 23.3% of investors sold at least one property in Brisbane. And this year, that number has increased to 26% of investors. What is happening there? What do you think's going on?
I think what's really interesting with that data set as well, Melinda, if you had time to take it one more year before that, the volume of investors selling in I think we actually asked in Queensland at the time a couple of years ago, it's always been number one. Like it has been number one for a few years, Queensland. And when we first asked that question in 2022, the number one reason why investors generally were selling, let's be honest, 2022, great market conditions generally everywhere, and certainly here in Brisbane and in Queensland. So that makes a lot of sense that 2022, investors were selling in greater numbers in Queensland and in Brisbane. Last year too, that was the number one location. This year again. What is this telling us? Well, in the last 12 months, the market conditions here in Brisbane have been very good. Also, another data set that from the survey, which actually is not on the report, was the fact that of the survey respondents, of those 1,300 survey respondents, of which they are coming from New South Wales, from Victoria, and from Queensland, they're coming across from our national survey respondents. Nearly 65% of them owned a property in Queensland. So you're a data nerd, so am I. If the majority of people that are filling out the survey own the most properties in a particular location, actually, now that we actually have that metric, it actually makes probably quite a lot of sense why we are seeing so many properties being sold in Brisbane and Queensland, just for the simple fact that most of the survey respondents own more property there than anywhere else. What I did find interesting with that stat, I was surprised it was as high as 65%, was that it confirms something that we've always known, which is the attractiveness of Brisbane and Queensland as an investment location, especially for interstate investors for many years. You remember 10 years ago when the market was really flat and it was really affordable here, we had a plethora of investors coming into Queensland from elsewhere. So I think that's the answer. Some of the potential answers to that question is with market conditions have been very strong. I think there's an element, and obviously in the survey we asked the reasons for selling, and there is some almost like protest sales going on regarding rental reforms, regarding increased holding and compliance costs. I think that's the case certainly in other states and territories, perhaps more than it is here in Queensland.
Actually, just on that point, it's a great lead into something else that I did want to cover, because in last year's survey, Queensland was actually ranked as one of the least accommodating states for property investors due to those legislative reforms. Let's not forget that horrific land tax change that was legislated but repealed. Yeah, that's right. Obviously, this year it's improved a lot here in Queensland. So can you just talk us through why Queensland's done better in terms of legislative reform and why other states like perhaps New South Wales and Victoria haven't fared so well in those areas?
And, it's interesting, Melinda, good question. And it shows that, state governments can impact sentiment, obviously negatively or positively, because you're right. Queensland is seen as much more pro property investment than it was just 12 months ago. Clearly, everywhere, over the last couple of years, has had a variety of rental reforms. There's been a bunch of new policies that have happened generally, in regards to residential tenancies legislation. Notwithstanding the ridiculous interstate land tax from a couple of years ago, the changes here in Queensland, perhaps if you were going to do a comparison to other states and territories, are perhaps seen as not quite as extreme as some of those policies that have been enacted in Victoria and in New South Wales. So I feel that, investors here, while there has been a lot of rental reforms and we still think that there's been too many and that the pendulum has swung too far out of, balance between the rights and responsibilities of tenants and owners. We always say it should be an equilibrium. Well, it should be fair and equitable. Hand on heart, you cannot say that. In any state or territory apart from perhaps WA. But here in Queensland, when you actually are doing a comparison, and unfortunately, part of my role is to try to understand all these different changes at state level, which becomes quite tricky because there's so many moving parts all the time. But knowing a reasonable amount about all of it, Queensland's changes have probably been more moderate than many other locations. So I think that's perhaps why. But also let's remember that this time last year, market conditions weren't as strong in Queensland as they are now. So, this is an investor sentiment survey. Sentiment means emotions, right? I mean, we know that as investors, we need to use our heads and not our hearts. But sentiment means actually, how do you feel about something, and how you feel about something, is your sentiment, but then that obviously is encouraging investors to behave in certain ways, which sometimes don't make a lot of economic sense.
And it will be interesting to see how next year's results actually play out as well, because I know a lot of the legislation around rental reforms here in Queensland, we knew they were coming, but a lot of them have not come into effect until right now. So we may not see the change in sentiment in terms of the landlord behaviour until after they're actually in place. So, I know minimum housing standards, for example, there would be a lot of investors potentially starting to feel the pinch, having to spend more to bring their properties up to comply with the new legislation. We've now also seen some rental freezes in place where you can't actually increase the rents more often than every 12 months. Now, whether we see that as a roll-on effect to influence sentiment, that's something for next year's survey, but it's definitely something I think that we should be looking for in next year's results.
Oh, and as well, unlike other states and territories, we have a state election coming up in
absolutely.
and the day after our PIPA national conference. So let's make sure when those of us who are flying down, we vote before we go. But that's potentially, look, there's a highly likelihood we will have this change of government here in Queensland. So it will be very interesting to see what happens after that in regards to some of these new legislation changes, or perhaps some other things that if we do have a new government, what they might bring to the table to support and encourage investors.
It will be interesting to see what happens after that election. I agree. And I thank you for the heads up on that, the date of that as well, Nicola. We are going to the conference, so we'll make sure we do our vote before we do leave.
Are you going to be there on the Saturday? Maybe we could all find somewhere at a bar and we can go and have a few beers and watch the results. But that's me. I like to watch election results because I'm a bit weird.
Absolutely.
Nicola, if we look at investment opportunities in Brisbane, so Brisbane remains one of the top locations for property investment, with 17.8% of the respondents considering it to be the best place to invest. Obviously, there's good opportunities in Brisbane.
Yeah. What was interesting with that result was what came in at number one, which, is a little head scratching. I don't know if we wanted to mention that or not, but
yeah, absolutely.
Yeah, I mean, one of the locations where investors have been selling the most is Melbourne, and Victoria is seen as the most anti-property investment state or territory in the country. Yet survey respondents indicated that Melbourne was potentially the number one location for property investment right now. That is possibly just because clearly we know that the market there has been and is woeful, and some investors are clearly thinking, well, it can't stay down forever, but they do have that land tax in there for many years. So, it's not as simplistic as saying, well, Melbourne's property prices seem to have dropped a lot. I should get in there and it'll probably go up next year. Well, who knows? It could be that way for a long time. But yeah, Brisbane, again, is always very popular with investors, continues to offer significant, property investment opportunities across Brisbane. Interestingly, though, with the survey, we always ask actually where investors are recognising as, some of the best investment locations right now. Brisbane's has always been up the top, pretty much up the top for many years. Only in the last 2 years has it kind of fallen out of favour just a little bit. Last year, number one was actually Perth, and then it was Brisbane. So Brisbane always continues to be in that sort of top level, but there probably has been a marked reduction in that. Who knows why?
I've got some numbers. Yeah, so I can see, based on your results from 2021 survey, 54% of your respondents at that time thought that Brisbane was the best place to invest. And now in 2024, that's dropped to 17.8% of survey respondents. So that's a big shift. And of course, when we look back to 2021 through to 2024 and see what's changed in Brisbane, of course, we've had astronomical property price growth in both segments of the market, in the house market and the unit and townhouse market. But despite that total drop in volume, I guess you could say, as you've pointed out, Brisbane does remain one of the top ranking cities for investment according to your survey respondents. So there's obviously some factors that are keeping it up there as an option. And of course, every year we're dealing with a different economic environment. We've now got interest rates much higher than they were in that post-COVID boom. So what factors do you see are playing out that keeps Brisbane up the top despite, the overall number of investors, I guess, contracting in terms of interest in Brisbane? What keeps it in that top ranking location?
I think, as I mentioned before, we clearly have had, a very, very high percentage of interstate investors in Brisbane for a long time, for a bunch of reasons, I mean, for a long time, there was the affordability play. Is that still there? Well, you and Scott would know better than me because I'm not a practicing buyer's agent or qualified property investment advisor. But depending on where you're buying from, where you're living in regards to wanting to invest in Brisbane, it probably still is, affordable. If you're sitting there living in Sydney or, parts of Melbourne, etc. Yep. So there are, many, many strings to the Brisbane bow that have been there for a long time. The smartest investors got in when the market was, really, really bad a number of years ago. And now it's no longer that way, but the smart investors continue to buy into Brisbane because there's so much upside potential. We have just almost like an embarrassment of major infrastructure underway, a booming population growth, a very strong economy, the potential for a state government change. No, I shouldn't put that in there. But clearly one of the big things that Brisbane's got going for it, and, those of us that have lived here for a very long time understand all of its many charms. How excited I am after the Paris Olympics. How excited I am for the Brisbane Olympics, until I sort of sat there and watched, the Olympics and how great it was that you actually got to sort of watch it in your own time based on whichever sport or whatever you wanted to watch. It really, I think, for me, and certainly a lot of people that I've spoken to, has really ignited this fire, this Olympic flame in each of us of how extraordinary it is to have this global sporting event landing in our city, in the river city, and it's less than 8 years away, which is nothing. And really, I mean, time goes so fast. So I think that's a big element of what's people are very, very excited about from an economic point of view, and in plenty of research, including from our former PIPA chair Peter Kalisos, has shown the positive impact on property performance from Olympic Games in the past. So we're smack bang in that sort of lead up to the Olympic Games now. It probably, until Paris was over, it would seem like a really long time away, and now it really doesn't. And I think that, we've had such an extraordinary period of growth. Economically, obviously, property pricing, whether it's a house or a unit. I mean, the unit market's going great guns and potentially is long overdue. So, the upside for investors in Brisbane is, really quite extraordinary at this point in time.
Yeah, I totally agree. The excitement for those Olympics coming. And even if you sit down, I know we won't get political, but once this election's done, and after sitting around watching some of the AFL finals and you see the MCG with that overhead shots and you look at the massive stadium and the crowd, something like that in Brisbane would be pretty cool, especially.
I'm sure we will find out about where the new stadium might be in the next few months, one would hope.
Yep.
I think it's something we often talk about, on the podcast. Once we have a new government, or at least we know who the government is going to be, I shouldn't be presumptuous, but basically at that time we'll have some certainty and clarity over what are we doing for the Olympics. Therefore, we'll have some certainty and clarity over the infrastructure development that needs to take place between now and then. And then we can actually help to ensure that property investors that are looking to position themselves in Brisbane are considering what Brisbane of the future is going to look like, not just Brisbane of the today, because we always must consider, looking forward, not just looking in the rear view mirror. And that's something 100%. That, as property investment advisors, we're always very cautious to advise on. And you mentioned, affordability. And yes, you are right, Nicola. Brisbane has become far less affordable when compared to other capital city markets around the country. And in fact, our median house price is now on par with Canberra, there's the second most expensive capital city market behind Sydney. So yes, our median house value has surpassed that of Melbourne and all other capitals. And our median unit value is now second in ranking behind Sydney as well. So that said, when we look at, what a $2 million budget, for example, can buy within 5 kilometres from the Brisbane 100%. CBD, I think that your bang for buck does stretch a little further here in Brisbane than the likes of Melbourne, as an example. So I guess median values are great because it's a representation from the data of the market as a whole. And when we talk about median values, of course, it's all of Greater Brisbane and Greater Melbourne.
That's right.
But it's really important for people to get an understanding of what the dollar value will buy in each location before those comparisons are made, because I think that becomes absolutely critical for investors as well.
I mean, you just think about, using Melbourne as an example, $2 million budget, you'll be lucky if you got 200 square metres of land. You might get 300. Do you know what I mean?
Yes.
So, yeah, exactly. And because, the architecture and the markets are so very different in each capital city and most major regions around the nation. So you're exactly right. It's very, you need to be very careful that you're not trying to compare something that's actually not comparable at all.
I want to touch on a national result that was recorded, and it relates to people in exiting the market. And what was really alarming, I guess, for me is that the holding period of the investment property that was sold. Now, from what I understand, there's 16% of property investors who sold actually only held the property for between 1 and 3 years, a further 23% for 3 to 7 years, and then a further 24% for 7 to 10 years. So the majority of people held properties for less than 10 years. And yet here we are as property investment professionals, always advocating for the fact that property is a long-term asset class. And we're seeing the majority of property investors actually sell out within a 10-year period. What's your take on that?
I know. That's a brand new question that we hadn't asked before. So again, like as I mentioned, it's always about the evolution of the survey and understanding what the heck's going on out there. I was flabbergasted by that result too, Melinda. I couldn't believe that, you had such a huge percentage of people that were selling and potentially hadn't even seen a full market cycle. And that's why I'm really interested with the new platform that we're having created, because we'll be able to actually see where those investors that were held for 1 to 3 up to 3 years, where they sold and why they sold. Because I'm presuming, mind you, that perhaps they may have educated guess, they may have bought at the peak of the market, overextended themselves financially. And now, as we know, interest rates, have increased tens of thousands. And, our annual interest rate costs every year have increased tens of thousands of dollars, which is okay for the majority of people who have been able, who perhaps didn't overextend themselves. So then probably is a cohort of people that bought at the peak of the cycle were just simply financially unable to hold those properties in the high interest rate environment we have, because otherwise it doesn't make a huge amount of sense that why you would be selling, and there was like you said, there was a percentage of people that hadn't even owned the property for a year, so you don't even get your CGT discount. So normally you would think that there's something very bad going on there for that number of people to be selling after such a short holding period time.
If you looked at, and I going off numbers here, and as we all know, Melinda's the data nerd, but when we did a update, I think a couple of weeks ago, I think since the start of COVID, this is testing my memory here, the property market in Brisbane, I think was 65.1%. How'd I go?
Wow.
Pretty good. Yeah, just under 70%. Yeah.
Had gone up. So look, I'm not sure. When I look at those years and say 1 to 3 or 3 to 7, that throws it out a little bit. But people could have cashed in. People could have gone, 100%. Well, you know what? I've made 65%. I'm cashing in. I'm out. I'll go and do something else. The other thing I guess you have to look at is your increased holding costs. I know you touched on interest rates, how they've gone up, but you've got insurance, which has gone up incredibly.
Yes.
Property management fees, all those rising costs would definitely have an impact on that market and the investors.
And I'll also
Yes, sorry, Melinda.
Oh, no, I was just going to say, I'll also just say, and again, this is not something that we've discussed on the podcast yet, but CoreLogic have just released their most recent pain and gain report. And it does show that those that have sold predominantly, if they've purchased a house, have actually made a capital gain. There's more in the unit market that have made a loss between purchase and resale, especially in some of those markets that are saturated in that space. But it's reassuring to see that there's fewer loss-making sales, because even though we've had costs escalate rapidly, that's been supported in a number of locations by rapidly escalating values.
That's right.
Not across the board, of course. There's been some locations where property values have actually retracted over the last 12 months. So it's not a one size fits all when it comes to what may be happening out there in the market.
And also it's important to when we're thinking about, that question, so many investors sold in Melbourne in the last 12 months. Prices are going backwards there. Why would you sell in a market like that?
Yeah.
What is that about? Is it a protest? Is it protest sales? Is it the new land tax? The much derided land tax down there? Is it lending considerations? I mean, we'll actually be able to find out more about that in the data. But and what's also interesting with our data set is that because our the survey respondents come from PIPA members, client databases. These are people that have engaged, generally speaking, with property investment professionals. They've paid for assistance or advice. So we certainly know that our survey skews more sophisticated, more educated investors. And that actually even comes through in some of our results. Our data set, the investors actually own a few more properties than what the average is around the nation. So that's because the data set, the survey respondents are actually predominantly people that are working with PIPA members. So that's why I wonder, speculation, which generally, like you mentioned, Scott, someone's made a lot of money in a couple of years, I'm out. Well, that's not property investment, that's speculation. And one would think that a lot of the people that filled out our survey, but given that they recognise the value of working with a paid professional, paying for a professional like a PIPA member, one would think that they wouldn't be into speculation. So that's why I'm really keen to do a much deeper dive into the research, because we'll actually be able to know. We'll actually have answers to these questions, which will be extraordinarily rich data to have.
I'm going to ask one more question, Nicola, because I'm conscious of time. I think we could talk for hours on some of these results because there's so much to unpack. But rising holding costs, obviously it's something that we've already touched on. But last year, the survey showed 26% of investors reported an increase in holding costs of between 11 and 25%. This year, more than 70% of investors reported that they're now paying an additional $10,000 to $60,000 in mortgage interest. That's a huge jump. I'm assuming this is one of the reasons why PIPA are the voice for landlords and property investors, because we hear a lot about the fact that rents have escalated rapidly and tenants are having to pay more. But this is the other side of the equation. These are landlords providing the rental accommodation. And if 70% of those that are providing rental accommodation are now paying between $10,000 and $60,000 more, that's a lot. And I'm assuming that's a lot more cost compared to the relative increase in rents. What's your take on that?
That's right, Melinda, because we also, in conjunction with that question, ask a subsequent question asking, okay, well, of your total increase in operational costs, how much have you passed on or been able to pass on? There's a distinction, right? Been able to pass on in the way of rent increases. And last year and this year, 55% of survey respondents said only up to 10% of the total increases in operational costs. So that's why we have this data. We know that most investors, look, like you've said there, interest repayments have gone up tens of thousands of dollars. You can't have a $500 rental unit in South Brisbane one day, and then because your rates come off fixed rate, and it's doubled, your interest repayments have doubled. You can't turn around. You can't turn around and say, actually, you know what? I actually need another $500 a week. Clearly, you can't
That's
do that.
right.
The
No.
market only bears what the market bears. And yes, there has been double-digit increases in some locations because of the undersupply of rental accommodation out there. But really what's happening at the moment, which policymakers generally do not want to believe, apart from in Western Australia, I'll say that because Western Australia is seen as the most property investment location in the country, is that investors are subsidising the tenants in their properties because our costs have increased so much. And yes, we did have a lower interest rate environment in the lead up to COVID, but still, we haven't had interest rates like this. I haven't seen interest rates like this since I bought my first property in 2007. So, it's a really long time ago where we've had low rates. So investors are wearing the financial burden of that. And what you can actually see in the data as well was that I think this year, 62% of investors said that they had negative cash flow in their portfolio. In 2022, that was 30%.
Yeah, it's a big difference. And I think what this highlights for me is the importance of property investors getting good advice upfront before they buy, because it's no longer the same game as it was 3 or 4 years ago. And, you can't just buy anywhere or buy anything and expect a solid return on your investment, because there has to be some strategy behind the asset and location selection, given we're no longer in a low interest rate environment.
No.
And therefore, those of us that have been through many cycles of higher and lower interest rates understand that different market segments move and shift in different ways according to broader economic conditions. Those that have only ever seen a low interest rate environment are now experiencing this higher interest rate environment for the first time. And I think that there may be some investors that unfortunately may not see the longer term returns that they're looking for because of some of the selections that they've made. So cannot stress the importance of getting good advice upfront before you buy, because the rules are changing, and the fact that it's costing you more to hold assets now means that you must consider those holding costs and your asset selection upfront more seriously before you buy.
Yeah, I have to echo that. I mean, having qualifications, and we're very lucky. Well, I'd say our clients are very lucky. In our team here at Streamline, we have 3 qualified property investment advisors, about to be another one. So we're about to
that's
have
great
in the team go through. But when you've got those qualifications, it's so important. I did notice in the survey, one of the things in there about who people get advice from.
Yes.
That it shocked me a little bit, actually.
52% are relying on their mortgage broker.
Yeah.
To me, I would
You're
have
remembering, though, that
mortgage
mortgage brokers can be QPIAs as well.
Correct.
They're members of us.
Whether they're mortgage brokers, whether they're buyers agents, QPIA, those qualifications, I think, are first thing people should really be asking for, to find out what qualifications they've got, what have they studied, what do they know about the market. These surveys are incredible, and our team goes through all this information as well. And it does help us understand the market and understand, as you said, the sentiment of investors to what they're thinking, because they're the people that are going to buy and sell as well.
And 100%, Scott, because, unfortunately in our industry or parts of our industry, it's a very low barrier to entry. And that's why PIPA was, created nearly 20 years ago, to try to change that, to encourage people, who wanted to come into the industry to not only join an industry association that stands for ethics and professionalism, but also to agree to abide by our code of conduct. PIPA membership is not tick and flick. We have knocked back many PIPA applications from members, including a number this year. We have terminated memberships in the past as well. And also one of the big things that we have done almost from the very beginning doing, it was to create the Qualified Property Investment Advisor course, because, the educational requirements in our industry are fairly non-existent. Well, not non-existent, but, there wasn't anything out there that existed to actually provide property investment education for people that were looking for it. For people that wanted to be, to educate themselves so that they could actually create a better service for their clients. So the QPIA is the benchmark for that. And I always say, if you're choosing to work with someone when you're wanting to invest in property around the country, if it's in Brisbane or it's in Perth or it's in Wagga Wagga, ensure that the person that you're working with is appropriately licensed in that location. Ensure that they have the license to actually operate in the locations that they are buying in, but also check that they're members of the relevant industry associations, whether that's the relevant real estate institute, whether it's REBA, whether it's PIPA. If not, ask why not.
Absolutely.
If not, ask why not. And of course, always work with someone who is a qualified property investment advisor. And that way, you're giving yourself the benefit of working not only with an expert, but safeguarding the future performance of your portfolio.
Couldn't have said it better myself. Thanks for that, Nicola.
You're welcome.
Nicola, I know that we normally try and keep it to about a 30-minute podcast, and we've probably gone slightly over, as we probably thought we would when we talked to you, because there is so much information, and we probably haven't covered all of it, that's for sure. I know that, definitely. I think there's a few podcasts in this one. But look, I think it's valuable information. It's incredible what you guys do, and that survey and the information that you do pull out of it and share as well. So well done again. We look forward to another one coming up again next year. We'll get through this one first, and then we'll get through.
And as I say, Scott, we will have the ability to segment that data in very, very interesting ways, which I will, as a fellow data nerd with my friend Melinda, will get stuck into sooner rather than later. So no doubt I'll be in touch with more metrics after that.
I can't wait to see it. Thank you so much once again for joining us today, Nicola. We really appreciate you sharing all of these findings with us, and hopefully our viewers or our listeners have taken away some really valuable information today for their own investing journey.
Great. Thanks for having me.
Well, I'm sure that Melinda will pull this apart even more, and we'll give our listeners some more information in the coming weeks through the podcast as well. Again, thanks, Nicola, for joining us. We look forward to catching up at the national conference as well in Melbourne this year. And as usual, I will let Melinda wrap things up from beautiful sunny Brisbane. Thank you very much for listening. Take care and bye for now.
Yes, thank you once again to everybody for tuning in to this week's episode of the Brisbane Property Podcast. As always, if you have enjoyed this episode, please share it with friends and family. Hit that subscribe button so you don't miss any future episodes. And as always, we look forward to speaking with you again next week. Until then, bye for now.